Our global business editor Uday Mukherjee joining us now on the free fall today. Uday, now what are you making of it? We've been talking about this for a while, wondering when the market would lose steam, but it clearly seems to be reacting rather perhaps to the Paytm listing and the weak listing that we saw there, perhaps to some other triggers. What do you feel drove the markets lower today, and is this just the beginning?
Hi, Abha. We've been speaking about this prospect for some time now, and I did mention last week as well that the Paytm listing will be quite influential in determining the near-term course of the market, because we've seen this story play out before. A very hyped IPO, a very large one, comes and hits the market, has a very poor listing, and that often turns the mood sour for the time being. It happened many years back with Reliance Power as well. So I was always apprehensive that something like this might happen with the very loftily valued Paytm. We did speak about it, and it's turned out that the market has reacted quite badly. Now it's difficult to say whether this correction is over, because we have corrected quite a bit. You know, it's 1,000 points in the Nifty already from the near-term high of 18,600, which we hit a few weeks back. And I have been telling you that 18,600 could possibly be the peak for the year. And it's increasingly looking like that might have been the top for the index for the time being. But I think it would be unfair to put all the blame at Paytm's doorstep. There are some other factors as well. I think the Reliance factor, the fact that the Aramco deal might have been called off, that led to a fall in the stock and might have soured sentiment a little bit. The repeal of the farm laws over the weekend, sentimentally at least, seems to have affected the public sector stocks, and those corrected quite significantly. So I think it's a combination of factors which have come together. Remember, the market was overvalued or highly valued and ripe for a correction in any case. When that happens, then any factor or a combination of factors can trigger off a sentiment-led correction, and that's pretty much what we've seen today. I don't know where it stops from here on, but I think reclaiming the highs for the year will be quite difficult, and I think in the near term we should brace ourselves for more volatility, because the market is still expensive despite the correction. And the way the India VIX has spiked up 18–20% today leads me to believe that there might be more volatility in the days to come. Sunil Singhania joins us on the show today. Sunil, good to see you after a long time, but it's an interesting juncture to be speaking to you, because after a long time the markets are correcting, and correcting quite sharply. Is it the Paytm factor? Is it the Reliance factor? Is it the repeal of the farm laws? What do you think is worrying the market or leading or triggering this correction?
So, thanks for having me, Udayan. And it's always easy in hindsight to, pinpoint the reasons for what has happened. But I think last couple of months, money making was becoming too easy, frankly. And all these IPOs opening at like 100%, 200% premium and getting subscribed 500 times, 1,000 times was getting a little bit unreal. And frankly, despite the fact that some of these have created businesses like out of nowhere and we adore them, I think the valuations were a question mark. At least, conservative investors like us hardly understood it. So I would say it's a combination of a lot of things. The market needed some reason for it to correct. And maybe the Paytm reason was a bigger reason, and all others just added to it. So I would say that it's been a sort of a welcome correction. Obviously, no investor likes a correction, but the fact of the matter is, what, we are down like 5–6% from the top. So it's hardly a meaningful kind of a correction. And from here on, it's always good that you cool down a little bit, you get your bearings in place, again figure out things which might not be the best things to do in as far as investing is concerned, and then move ahead.
And what's an old-fashioned investor like you doing in approaching these new digital listings? They've all corrected after the Paytm episode. Are you looking at them closely, or do you think they still have not arrived at valuations which would tempt a traditional investor like you?
So then, first of all, it's not necessary that if you're a traditional investor, you don't like growth. Frankly, we have been very successful, and so have been the other investors, in buying growth stocks. But there is always a value you put to it. So I think the one thing which we always remember is that what you pay today to buy a stock has to be more than repaid by way of future profitability. I think that is one condition which is sort of non-negotiable. As far as some of these recent IPOs are concerned, clearly, as I said earlier, we adore them. They're entrepreneurs who have created new businesses, have brought in a lot of FDI for India, and have also created, hundreds and thousands of jobs. And, salute to them. At the same time, the fundamental aspect of valuing them has been something which at least we as investors have not understood. So as I said earlier, there has to be some sense of future profitability coming in. So either you are building a business to make profit, or you're building a business to just list or sell out. And obviously the second seems to be more the thought process here. And that is the reason, at least we have avoided this hype kind of new age businesses. There are some businesses which will do very well even in the new age businesses. Some businesses we like. There will always be difference of opinion as far as valuations are concerned. But quite a few of them have got listed just based on the perspective that they might go up in stock prices, not necessarily make profit.